Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday morning pre-market webcast. Okay, so we print new all-time highs yesterday, 85.75. We get the Fed announcement. We saw some resistance at the hourly mid-band and at our pre-Fed price at 75.25. That failed down to the 63s, which ended up being a really nice short for us. We talked about that a little bit in the webinar. We were short 75.5. Tony Rego called a move down to 6,200 in the NQ during the webinar. So mixed with all the longer term stuff, you ended up with about 40 handles of NQ if you took action on it, and you ended up with a 10 handle ES short if you wanted it. So don't ever say we never did anything for you. Down to 63s, they failed to convert the weekly pivot. That got us out of our shorts and into a long in the 67 area against weekly pivot. Up we go. Are we getting back to business as usual? I don't know, but I know that we've taken a bunch of profits and we've got our risk out, so I really don't care. We're back into the daily pivot. Lower high versus higher high. That's the deal. What do the bulls have to do over the next 2 days? They need to make a higher high. There's some catalysts that can do that potentially. You've got the jobs report tomorrow morning. You've got a new Fed chair being announced. Could that take it off, or is it going to head down? I don't know. I don't try to predict reaction. What I do know is that the weekly pivot area from 63 to 66 is a floor, is a price support floor until it's converted. And what we've typically seen as we get later into the week is that price support floor tends to end up with directional upside pricing through the end of the week because the dip buyers know they can. Okay? And the bears know they can't stop it. Everybody falls into old habits, and we grind to the upside. So my long runner, I'm going to let it run. And that's, so we may have a pretty boring day in the room today, letting our winning runners run. But that's a pretty, that's definitely that's a first world problem if there ever was one. So out on the daily chart, you can see what potentially is a nice little topping candle. Okay. The problem with that is the bears have to actually follow through. You got the daily mid-band down at basically 61. They did a very shallow test of that. But you just can't take the bears seriously until they convert weekly pivot. They've got to convert the 9-day 68s, weekly pivot 66.5. And now, with the move to 63, you can lump the daily mid-band in there too. They have to start living down here. We've been living up here for months. If you start living down here, then you end up in a sell rallies market. Remember, that's our baseline assumption. Above the daily mid-band, we're buy dips. Below the daily mid-band, we're sell rallies. And 90% of the time, that's going to keep you on the correct side of price. Okay. So that's all I've got. I'll be back for a midday update. I hope everybody enjoyed the webinar yesterday. We had a lot of fun doing it. We're going to do one next Tuesday. We're going to start to break down into pieces that Trading Psychology 101 webinar we did, and we're going to do one specifically on how to handle losses, which I think is the number one way to remain successful over an extended period of time as a trader. So the whole team will be there putting that on. In the meantime, come check us out. Come trade this stuff. We would love to have you, and we look forward to meeting you. It's a great bunch of people, and we take it seriously, and it's a good place to learn your craft. So take care. I'll catch everybody for the midday update. Trade them well. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook, and join us for a free trial at www.princetontrader.com. Trade them well.